Shares of Goldman Sachs giving back earlier gains after the company reported better than estimated second quarter earnings. Net income declined 11%, less than analysts estimated. Gains in commodities, prime brokerage, and asset management offset losses in fixed income. We're going to turn to Joe Keating of RBC Private Bank, and we go to Portland. We're joined there by Ralph Cole, Senior Vice President of Research at Ferguson Wellman Capital Management, which has about $2.7 billion under management, including about 35,000 Goldman shares. Ralph, thanks for joining us as well.
Glad to be here.
I'm wondering if what you heard in the conference call, what you saw from the report, makes you add to your position in Goldman today. Stocks moving lower.
Well, we're not going to add to it at these levels. I think if it pulled back more than, say, 10% from this level, we'd definitely be buyers of the name. Right now, the conference call is ongoing, so we'll see what comes out of that to see if the stock drops further.
Why do you think it's dropping now?
Well, I think this stock ran up quite a bit, over 10% the last couple weeks, with expectations that they would have a blowout quarter, and that's exactly what they delivered. And sometimes on Wall Street, it's sell the news. And I think we got good news today, and it's tough to see what's the encore after this.
Just want to interrupt this conversation for a moment because we have some breaking news from the Associated Press I want to put out there. There has been a car bomb at a Baghdad market. 11 people are dead. 35 have been wounded. This is according to the Associated Press again in Baghdad, a car bomb there killing 11. We're going to watch those headlines, of course, throughout the next couple of hours here. In the meantime, we want to get back to our conversation about Goldman Sachs and the financials in general. Joe, let me turn to you for this. This is an area you've avoided by design, right, for a while, all financials.
Well, not all financials. We've stayed away from the investment banks, and I actually have a question for Ralph on that.
Sure.
You know, Ralph, the real issue with the investment banks has been transparency about what they have on their balance sheets. How comfortable are you today relative to what Goldman has on their balance sheet?
Well, they took down their level 3 assets, about $20 billion, which makes us feel better. I think a lot of what you're buying when you buy an investment bank is you have to buy a little bit on faith, a little bit in management. And obviously Goldman is the only investment bank we own because that's the only management team that has proven to be not necessarily trustworthy, but more consistent than all the other management teams and really great allocators of capital. And in the end, I think that's what you have to trust them to do, which it's hard to do. It's very hard to do in this environment.
Ralph, of course, another big topic has been leverage. Is Goldman leveraged enough to take advantage of whatever opportunities it might find out there now?
Well, I think we're all in favor of all the investment banks reducing their leverage, and that's probably the least appealing part of the sector right now, because as they reduce leverage, it's really hard to grow profits at the same time. But they need to be more conservatively managed, and that's what the last 12 months have really proven.
Ralph Cole, we want to thank you from Ferguson Wellman Capital. Thanks for joining us today.
I'm glad to be here. Thank you.